Hey guys, welcome back. In second part of this video we will speak about Dropbox. Why do I think it might be a takeover target? Why do I think Dropbox is significantly undervalued? I know I already made a few videos about Dropbox, about fundamental evaluations, about bullish thesis, and why I actually purchased stocks. But there have been some news about this company and I wanted to share those with you. And again, explain to you why I really think Dropbox might be a great target for a takeover. But before we move on to that topic, I would like to share you some changes that I made in my portfolio. As you can see, my cash position increased significantly compared to only several days ago. And I'm sitting right now at around 20% cash, perhaps a little bit more. My cash position is almost $10,000. And my portfolio is right now at around $49,000. We are actually approaching to $50,000, just unbelievable number, for me personally of course. I will also explain to you why did I increase my cash position. If you remember perhaps at the beginning of this year, I have widely outperformed S&P 500 and right now my year-to-date return is sitting at around 40%. So how did I do that? Well, at the end of last year I actually started selling my stocks. The reason for that is based on a lot of data that I'm monitoring. My personal opinion was that S&P 500 and most of my stocks were simply too expensive and I couldn't sleep well figuratively with 100% my portfolio invested in stocks. And as stocks kept growing, I kept selling them. I kept increasing my cash position. And that is what actually I'm doing right now. So let's just move on. Let me show you what did I actually sell, why did I sell it. So yesterday I actually sold 50 stocks of Cirrus Logic and 10 stocks of VeriSign. You can see it here under quantity. And I actually increased my cash position for about $6.2 thousand with these two moves. I really like all of my positions and all of my stocks, but I had to sell some of them, so I have chosen Cirrus Logic. The reason for that is I actually bought them only few months ago for $55, $56. They went up for almost 50% in only few months. And right now, to be honest, on this price, I don't like very much their future prospects. I still like their management, I still like their products, and I think they will do really well as a company. But at these prices, at these valuations, I'm not very comfortable holding these stocks. And VeriSign, I actually bought them for $202 or $3 and sold them for $205. So actually, I didn't earn anything on this position. But VeriSign is a very solid company, very good business model with very high margins. But they're also quite expensive, so I don't expect big price increase on their stocks anytime soon. They are actually slow, long-term compounder, and that is why I actually bought them. But again, I had to sell some stocks and I have chosen these two. But hopefully I will be able to buy them back in the future. So we had a really big spike in stock prices in last few weeks based on a vaccine news. As you can see here, first COVID vaccine in UK has started and massive rollout begins. I think that a lot of people thought when we heard that vaccines are coming out, that a lot of people thought, okay, all of the issues that were caused by coronavirus in this year will basically end in only a few months. And that is why S&P 500 is breaking all-time high records basically every single week. VIX, which is basically fear index, as you can see here, has been falling down basically since March, which means that sentiment is optimistic. There is very much of optimism on the markets. People are confident everything will keep going up and that everything in economy will keep improving constantly and the worst is basically behind us. Fear and greed index is consequently almost at 100, which is extremely greedy, and we actually have perfect cocktail for a melt up in stocks. Although I really agree that vaccine is a great thing, that elderly people which are perhaps more under threat of coronavirus can be vaccinated, I don't agree that that will basically delete all of negative stuff that happened in real economy. And I think that actually stocks went up a little bit too much compared to the real economy and consequently that stocks will have to correct a little bit to catch up with a economy which is not recovering so fast. A lot of things that happened in the economy, you will probably agree with me, are permanent and can't just be returned to normal like nothing actually happened. Not only that, but again, situation on markets are actually like everything is perfect. As you've seen, VIX is falling, fear and greed index is rising, PE ratio of stocks is extremely high, valuations of stocks is extremely high, and I am personally a little bit scared. Of course, I'm not very pessimistic. I'm not 100% sure that we will have some kind of huge drop on the market like we've had in March, but I do want to increase my cash position to around 20, 30, perhaps even 40% if we keep going up in next few weeks. But of course, I will let you know if I make any additional changes in my portfolio. Another thing why I think stocks could continue going up is this US dollar. US dollar has been actually weakening in last half year. I'm comparing dollar to the euro on this chart, but you can compare it to any basket of currencies. For example, for investors from Europe, like I am, even though S&P 500 went up a lot, dollar has also weakened for around 10% in last 6 months. So what actually could happen in the future, perhaps dollar could keep weakening and S&P 500 could keep going up. And in that case, people like me, people from Europe, who would be holding dollars on their account in cash without being invested in stocks, could be decimated. Our returns could be completely destroyed. And that is why I actually am only holding 20 to 25% of cash right now. And I'm closely monitoring what is happening on the markets, and I will act accordingly. And again, I will update you about any possible changes. So let's move on to the Dropbox and why I really think Dropbox might be a great takeover target. There have been some kind of conference where CEO of Dropbox was a guest and he was asked very interesting questions. And I will actually go through them right now, right here, and compare Dropbox with some other companies. And I will explain to you why I really think that Dropbox might receive some kind of buyout offer soon if Dropbox price remains at around $20 right as it is right now. So first of all, check this out. HelloSign products were seeing trial starts show at 40% increase relative to pre-COVID levels. That is just unbelievable. So their core products are growing very fast. Their revenue growth is double digit. And that's out of the question. I think everybody knows that. But there is a lot of new features that they are rolling out which are growing rapidly and which really have bright future ahead of them, but that markets are completely ignoring. For example, like HelloSign. I'm really thrilled to see 40% increase relative to pre-COVID levels in usage of HelloSign. I think we will start hearing more and more about this specific feature. Why is that? Well, as you know, DocuSign is biggest e-signing company in the world right now, and market capitalization of DocuSign is right now sitting at around $43 billion. And that is basically their core business. That's all they're doing. They're not even profitable and they're worth like 5 times more than Dropbox is. You can check it here. Market cap of Dropbox is a little bit over $8 billion. Of course, HelloSign is a lot smaller than DocuSign, but rates at which HelloSign is growing are faster than DocuSign's rates. And even if HelloSign becomes number 2, that is again only some kind of side business for a Dropbox. That is just incredible. And again, I'm quite certain that we will hear more and more about this feature in the future. And then again, even more interesting stuff was said on that conference. For example, we are on target to deliver operating margins of 20% this year. We are going to deliver free cash flow of $1 billion in 2024. And then look at this. We plan to allocate our capital thoughtfully according to our organic initiatives, M&A, and share repurchases, where we do plan to allocate a significant portion of our annual free cash flow to share repurchases. That is what I really wanted to see. I think price of Dropbox is really significantly undervalued, and I think they should focus on doing share buybacks as long as stock price of Dropbox is under $25. And they will actually give us even more details about share buybacks on the next slide. We are certainly investing for double-digit revenue growth, and I will say that even with conservative revenue growth rates. So basically they are conservatively forecasting 12, 13 to 14% revenue growth rate, which is really unbelievable. Okay, so let's get back to share buybacks. We have this initial 600 million authorization through the end of the third quarter, and they spent only $178 million against that 600 million. And look at these guys. And I said on the last call that we do plan to accelerate the pace of that repurchase, where we aim to exhaust that authorization by the end of the first quarter of next year. So basically they will burn more than $400 million in only a few months on share buybacks. That is what I want to see. They will generate so much cash in next few years that I don't think there is better place right now for that cash than buying back shares of Dropbox, which are really significantly undervalued. So why do I think Dropbox might be a target for a takeover from some bigger company? Well, as you've seen, market cap of Dropbox is only $8 billion. They are generating more than $500 million of free cash flow and will be generating over $1 billion of free cash flow for a few years. On top of that, they don't have any debt and they have more than $1 billion of cash sitting on their balance sheet. So they are extremely healthy company. They are growing their revenue for approximately 15% year-on-year basis, and they will continue to do so in the at least next several years. They also have several new features that are rolling out, which are not monetized at all right now, and who knows what is potential of those things. And again, they are valued like some old boring industrial company which is producing something that won't be needed at all and will be replaced and disrupted in a few years. Again, so for only $8 billion, you get a company with more than $1 billion sitting on their bank account. You get a company which will be producing over $1 billion of cash flow annually in only a few years. And remember, at a period when bonds are basically yielding 0%, when interest on cash on your bank account are also almost 0%, when PE ratios of a profitable company is above 30, basically it's extremely hard to find any good return. And then we have Dropbox, which is extremely profitable and which will be generating billions of dollars of return in next several years. With zero debt, I really think if we don't see significant increase in stock price of Dropbox, and if we don't see a increase in valuation of Dropbox, that we will start seeing offers for a takeover. I really don't like giving some kind of forecasts and short-term price targets or ideas what might happen on the markets, but I think it's really becoming harder and harder to ignore Dropbox's performance and what actually you could get with investing only $8 billion in a company like this. And on top of that, I'm really thinking about investing more money into Dropbox, although it is my biggest position right now. I have 600 stocks and which are worth more than $12,000 on a small portfolio as mine is, but I'm really thinking about adding additional 2, 3 or even 400 stocks. Hopefully my thesis makes a lot of sense to you. So we are in a period with extremely low interest rates, with extremely low returns on investments, extremely high valuations on most of the companies, and then we have tech company which is growing rapidly with perfect balance sheet, with a ton of cash on their balance sheet, and then they are generating double-digit free cash flow returns on your investment. So yeah, I don't think we will have this situation for a long time. Either we will start seeing some takeover propositions, or we will have to see significant price increase in Dropbox's stocks. I really can't imagine this situation of Dropbox and stagnation of a stock price, which we've seen in the last few years, continue in the future. Because perhaps in the past this was speculation because Dropbox wasn't profitable, but now when we have gross margins of 80%, net margins of over 20%, and hundreds of millions of dollars of free cash flow, which will just keep increasing rapidly in the next few years, there is no way markets will keep ignoring these metrics.